I remember I was looking at just like a sixplex here a few months back here in Halifax, and the bank literally wanted 60% down. I'm like, this is absolutely not. I'm not. So it's tough, man. It's tough.
Hello and welcome to another episode of the Refined Real Estate Podcast. I am your host, Ian Armour, joined by my co-host, Manny. Today's episode, we're going to talk about the difference, some pros and cons between smaller assets versus some larger assets. Yeah, we just sort of give our takes. We've had both smaller assets and now we're getting into even bigger assets, so just some of the lessons we've learned or some of the pros that we see. So we really hope you guys enjoy that. Before that, please like and subscribe, 5-star review on Apple Podcasts, Spotify, YouTube, all that good stuff. And for those that don't know, we are real estate investors in Halifax, Nova Scotia. We've done flips and burrs and wholesales. We've done 60 plus units, and we've got a bunch more in the pipe now. So yeah, we hope you guys enjoy this episode. And if you have any questions, by all means, reach out to us on Instagram, on Facebook, whatever it might be. We are happy to chat. So without further ado, let's get into the episode. So yeah, Manny, you just had a big weekend. So maybe tell us a little bit about some of your takeaways from that.
Yeah, man. So I was in Niagara for the weekend at a Wealth Genius Expand conference. They have these twice a year, just like a big get together of all the members, and also just a bunch of different vendors that come and talk to us about a bunch of different things. But honestly, by far, every single time I say it, my favorite thing, just the networking. Getting to hang out with people for 2-3 straight days that are on the same wavelength as us, that have the same goals, same aspirations, that are doing bigger things too. I'm talking to guys that are, doing 10, 20, $100 million deals. I don't get the chance to kind of see them in person and hang out on a regular basis. Zoom's one thing, but when you're in person with them, having dinner, it's just a different game. So I had an amazing time. I can't wait for the next one. It's in December, but awesome weekend. What about you? How was your weekend?
Oh, weekend was good. A lot more chill than that, especially when it comes to real estate. But again, just chipping away at things that we have in the works, both down in the States, some of the portfolio stuff here, analyzing some deals, that type of stuff. So yeah, more the less fun stuff, but the necessary stuff.
Exactly. It's still important, very important.
Oh, very much so. So yeah, the show today, we just want to chat about some of the things that we've seen between investing in smaller assets and larger assets, some of the pros and cons, things to watch for, and also just trying to determine as an investor what route you want to go with things, because I know just chatting with some of the people that do listen to the show, some people just want to go buy their first real estate portfolio or property, and then some people want to scale their portfolio up to 100, 200, 300 units. So we're going to give some of our takes on some of the lessons we've learned or things that we felt from both assets groups. So why don't we start with the small, and Manny, maybe we'll get you to start with that.
Sure, man. So I'll just chuck a couple pros out. For one, I think the big thing, it's not that intimidating. You can go buy a duplex, triplex. Even if it's your first one, it can be daunting, but it's not like you're buying 100, 200 unit portfolio. It's relatively big picture, it's kind of small scale. So buying, or even if it's single family home, doesn't have to be a duplex, it can be just any small multi or rental, not that intimidating. It's somewhat manageable. It doesn't have to cost a whole lot of money to get into it, especially if you're going to house hack it type of thing. You can get in low money down. It's really I would say the majority of people start like that. It's rare that somebody just jumps into real estate and they'll buy a mid-sized or a large multifamily. So in that regard, I think that's a pretty major pro.
Yeah, absolutely. Big pro for me in that regard is, and I guess it's looks like pro and con depending on what way you want to look at it, but is the control or the know or the knowledge of what's going on. So, if you're buying a single family house, you don't have a big team and information's coming from a bunch of different directions. Typically, it's just you maybe a partner, whatever it might be, and basically what's going on. So whether it's a flip or an Airbnb or whatever it might be, you're really not that far away from the actual action that's happening. So that's quite nice, especially in the beginning as you're learning the ropes, or if are just systematizing these smaller deals. It's certainly a benefit to have a little bit more control in them.
No, absolutely. Another pro, just they're cheaper compared to a big apartment building. You can buy, well, they can be pretty expensive here in Halifax, depending where you are. But all things considered, compared to multis or mid-size or like larger apartment buildings, a duplex, a triplex, they're much more affordable. Anywhere between three, they can go up to $1 million. They can get expensive, but still, you know what I mean. It's less expensive, even if you have to put 20% down. Like if you've bought a couple of them and you have to put 20% down on, 700,000, it's much more doable versus 25% down on, a multi-million-dollar apartment building.
Yep, 100%. I guess another one for me would be the control. And so before it was knowledge of what's going on, but this is the actual control. So especially in Halifax, for example, if you're buying a house or a duplex, the chance of you being able to go in and get the tenants out or whatever it is that you want to do so you can actually go in and do your renovations, much easier, much easier. Once you get into those, 4, 5, 6+ units, that's when the tenancy board and all that stuff comes into play. But if you just want to buy someone's house or duplex, chances are you'll be able to go in and have the control over that asset so you can get to work and make things happen quite quickly. So
Yeah. And then one other pro for me, like the last one here, is just financing. It can be easier, and you almost always get better rates than commercial rates. So your mortgage will be cheaper than it would be if you're buying a big old apartment building. And also, like I said, the financing, like if you have a good job, you get pre-approved for X amount of money, and then you can just go shopping for what you're approved for. Whereas if you're buying a commercial, it's a different world. And we'll touch on that later on.
yeah, absolutely. Nope, that's a great one. So then I guess we'll get into some of the cons. So for me, the big one that comes to mind would be scalability. So
Me too.
that's by far the I'd say the largest one. It's harder to grow a portfolio that way, harder to scale up your assets that way. You go in, you buy one, and then especially with the way the banking system works here, for your first house or 2, 3, maybe 4, possibly, it's pretty straightforward. But then once you get past that limit, things start getting a lot more complicated on the financing side, and then you don't get those as good of those rates, and then things get a little bit more expensive that way. The other thing is to scale that up. Now you actually have to start having teams in place, and you're doing a lot more. And then once you get into a few rentals, it can be quite a bit of work. So yeah, you're losing that element of control that we were talking about, and you're now having to rely on more people. You don't have as much sense of what's going on. And again, a lot of people have done it and done it quite successfully. And then a lot of people, they get stuck at that 2, 3 rental properties, and then that's about all that they can handle. And a huge proponent of that is just not building those systems and allowing yourself to scale that way. But so a con for you.
So, but that's actually my biggest con that you just touched on there, scalability. But the second biggest one would be is that the value of your residential buildings are based on the whims of the market. So if you bought something for, 500 grand and you do a lot of work to it and it's worth more, but if all the comps around you that are similar have gone down in value, yours has gone down in value. Where it's not like that for commercial real estate, and that's just a bummer, It's like, but at the same time, when the market goes up like crazy, the value of your stuff goes up like crazy. But, for us, where we like predictability, we like control, just where we have to base the value of our assets strictly on what the market's doing, it's just not ideal for us.
No, absolutely. And then I guess, yeah, those are again, some of the other stuff I'm going to say as the cons for the larger stuff is just going to, or the pros for the other stuff is kind of what the cons are that we're going to get in for some of the smaller projects here. But I think we can just jump into that, so then we can just flow a little bit more freely from there. So let's go into some of the pros for some of the larger units. And by larger, we're not talking about, 100 units. We're talking, even 8, 10, 12 unit buildings and going from there. So I'll start with one of my pros there would be your economics of scale for sure. So because you have a larger asset and in theory it's producing more income, you can go in and you can hire property managers. You can hire whole or more people to do the larger renovation work. So it's not just a buddy helping you to go lay some flooring. You got say 8 units to do. You can actually get proper construction crews in, and in theory that'll help you out. But the property management one's a huge one for me for sure. So if you could, those people listening that have 2-3 tenants out there and they're like, oh, this can get quite stressful at times. Well, imagine scaling up and you have a lot more tenants to deal with. That's going to get increasingly more difficult to do. So as you grow and you get larger buildings, you gain that economics of scale where you can come in and get teams, appropriate teams in place.
Absolutely. And I guess my next pro, it kind of goes hand in hand with my last con there. The value of these buildings, these apartment buildings, are based off the NOI and the cap rate. So I just want to tell you a quick story. Ian, I was just going to text you, but I'm like, let me save it for the podcast. Had a meeting yesterday with a guy, and he was telling me about an apartment building that sold here in South End of Halifax. And the person that bought it got it for an absolute steal. When I say steal, it was still pretty expensive, but compared to what it was actually worth. So this guy so this is a large apartment building, 100 plus units, A plus area. He bought it for about $31 million. And then he got it appraised 3 weeks later, and the appraisal came back at $39 million. So this guy made $8 million in like less than a month in equity, like that's bonkers. And like, and that's what happens at this level, And this guy, is this because he bought it undervalued? And I think he was able to increase some rents because there were some vacancies in that time period. But like, where else are you making $8 million in less than a month? Nowhere, unless you're freaking Messi or one of these top tier athletes, or like the billionaires out there. That's $8 million is nothing to them.
No, that's incredible. I know. Listening to, and we referenced him a bunch, is Hermosi, and he was like, the easiest way to make $1 million is buy something for $9 million and sell it for $10 million. So it like goes into that. So it's like, again, when you start thinking about these larger projects, and yes, some of them might be a little bit more intimidating. Yes, there's a lot more knowledge, not necessarily more knowledge that you need to know, but you need different skills when you're going into these larger projects. So I know, like for me, for example, when I was doing, my very first flips, it was like, okay, skills that I have. I can go lay flooring. I can go put trim on the walls. I can obviously get the roof done, that type of stuff. But then as we're buying even the 24 unit that we just closed on, it's like, well, how fast I can lay flooring or do a roof has nothing to do with procuring this asset. So it was, it's definitely been a switch in value based on what the skill sets are and how you can apply them. So that's the other thing, I guess, to consider when you're anyone listening is like, okay, should I go do a quick flip and fix, or fix and flip, or should I go, start looking for a 6, 7, 8 unit building? So it's like, okay, what skills do you have? Are you good managing people? Are you good running numbers? Are you good, dealing with contractors? Are you good laying flooring? So it's like, okay, what skills that do you already have that you can apply, and that should also help dictate what route you move forward with.
No, for sure. I guess another pro for me too would be the fact when you're dealing with the sellers of these, assets, they're more business savvy people as opposed to the mom and pop owners that own single families or duplex triplexes. So when you go into negotiations and you start talking about vendor takebacks or seller financing type thing, it's not like you're just talking to just a layman. They understand where you're coming from, especially the bigger buildings, because they understand the value of them and the financing. It all comes down to interest rates and stuff like that, and like they're smart people, right? So like they see the benefits of seller financing, just the tax implications and stuff like that. Whereas if I go talk to little grandma here that's selling her duplex, she doesn't know what a vendor take back is, so I have to teach her a whole new concept, and she has to trust me, and it's just a layer of complication that is not it's not there when I'm talking to the guys that own the bigger stuff.
Absolutely. And I know countless times when trying to buy, some of these larger buildings that I've mentioned to the potential sellers, hey, maybe we do a vendor take back, and they say, well, that's how I bought the building years ago. So it's like, yeah, it's not a new concept. It's been in use for years and years and years. So yeah, no, absolutely. It's a different client base when you're dealing with them. But then, having said that, I know what, we've looked at buildings before with sellers that are older and just want it nice, easy. They've had it for 50 years, and they're, not necessarily sophisticated, but they certainly have a good grasp on things. So, yeah.
Yeah, and I don't want to say you can take advantage of them because that's not what I mean, but you can usually negotiate a better deal with people like that versus the sophisticated people. They know the value
Yeah.
of their buildings. So you can, of course, there's always negotiation, but like you're not taking advantage of anybody in that regard. I guess one con, there's not many, but like there are some for sure for the big ones. And like a big one for me is it's really not for, well, okay. I was going to say it's not for like a new investor to go buy. And now when I say these bigger apartment buildings, let's, you said earlier, like the, 8, 12 units. Let's talk about the bigger stuff. I would 50 units plus. If you're a brand new investor to go and buy something that's large, 20, 50, 100 units, I would not recommend it unless you have an amazing team, whether that be like a mentor that's kind of holding your hand through the process, or like one of your partners that's kind of done this stuff before. Because these bigger things, there's a lot more money involved here, and especially if you're raising capital versus like your own money. When things go wrong on a small duplex, it's like, okay, this might be $10,000, $50,000, $100,000 loss, But if something goes wrong on a 100-unit building, this could be a million, multiple millions of dollars in the red, and it can just be devastating, not only to you, but to your investors, your reputation, and it can be hard to bounce back from. So unless you are well equipped with a really, really strong team around you, there's value in starting small, because even with your own money, like raising money for your first deal, again, I personally wouldn't suggest it unless, like I said, you have people around you that have taught you along the way. But like me, I started with my own money. I think did you as well for like the first few deals too, right?
Yep,
So
first handful.
same here. And then you evolve, because at that point, you know how to manage your own properties. You know what you did, and you've learned. You've probably read books. You've probably listened to podcasts, watched YouTube videos, educated yourself, and now you're prepared to make the leap into the big dogs. So jumping into something big right away, wouldn't recommend it. So in that sense, it's kind of a con, because this is a serious business. This is not just like, this is not mom and pop run stuff, man. This is some serious stuff involved here.
Absolutely. And I guess on that note too, another con is, again, because you are operating at a larger scale, things like regulatory changes can really throw a wrench in things. So if they, mid-project slap a rent cap on, which many people have experienced, and your plan was to do, 5, 6, 7% rent increase over the next 2, 3 years, and then all of a sudden your rents are completely capped. I mean, that could have a very large impact on the total outcome of the project. So.
Yeah, big time. And now another con. I guess like earlier I said a pro for the financing was, I'm sorry, a pro for the small stuff was financing. A con can sometimes be considered for the financing for the big stuff, but sometimes some would say it could be a pro, because banks will loan you the money based off of like the DCR, so the debt cover ratio. Here in Canada, it's usually like they want 1.2, sometimes 1.1 with the CMHC stuff, but generally speaking, it's 1.2 if you just want traditional financing off the rip. And that's tough to hit right now, man, with these interest rates, and especially if somebody has depressed rents. So normally when you could get in for 25% down, now you might need to fork up 30, 35, 40, 50% down if you really want to make the numbers work. I remember I was looking at just like a sixplex here a few months back here in Halifax, and the bank literally wanted 60% down. I'm like, this is absolutely not. I'm not. So it's tough, man. It's tough. So you have to. That's where creative financing will be a strength, and make sure you understand that and leverage that. But I guess on the flip side, it can be a pro sometimes, because now, whereas in residential financing, they care about how much you make, like the individual. Now in commercial financing, they care about how the building's doing. So if the building's operating really well, then you can get those favorable terms. You could have no income. Well, they'll look into you still, but like it's really like the bulk of it's like they care about how the building's doing.
Yep. No, I know, like, students can get, like master students and stuff, they can get mortgages on multi-units. Again, you have good credit and you can prove that the building's making money, then, you can certainly make things work. And again, Janelle and I can certainly help anyone out with any of those financing questions. But yeah, financing, and as we've seen down in the States, their financing is even more all over the place. So, and the difference on, we're looking at the 38 unit building, for example, right now, and the difference between getting a, say, 5%, 6% interest rate and like a 8, 9, 10% interest rate is the difference of thousands of dollars, going from negative $1,000 to actually positive a couple $1,000. So it's so important for that type of stuff. So yeah, like interest rates, they, big project, small project, they can suck either way. But if you have again 100 units and you aren't prepared for those interest rates to go up, that could really sink the project. So
Yes, absolutely. Another pro for the big stuff, I would say, is the fact that you can more easily partner with people. And what I mean by that is there's just more meat on the bone to go around.
yeah.
Like if me, you, Thomas, and our investors went and bought a duplex here in Halifax, like, we would make nominal gains. It would be a waste of everybody's time. But now if we're going to buy 24 units, 76 units, 100 plus units, now that it's profitable. It's profitable for everybody, and now we can split up roles.
Yep.
I can do something, Ian can do something, Thomas, somebody else can do something. So it just makes life a little bit easier while also being more profitable and kind of more fun. I don't know.
Yeah.
Some people like to go at it alone. There's a lot of lone wolves out there, and that's fine. Like there's nothing wrong with that. If that's your personality type, know yourself, do your thing. But like if you're the kind of person that likes to, work with others and really scale up just gigantic portfolios, it's much easier to do as a team.
Absolutely. And the old saying, it's, would you rather have a grape or would you rather 1/10 of a watermelon?
Yeah, exactly.
Yeah.
Watermelon all day,
Yeah.
But yeah, I guess, what about you? I can't think of many cons. It's because maybe that's my bias. I just think large. Okay, I would say one like pro. Let me go back to the other one. Is like you can slowly over time build up like a small portfolio, like you said. Like I met a guy just last week. he had 20 duplexes all around HRM. It's a
Oh,
lot.
yeah.
20 duplexes, and they're all paid off, and he's ready to sell them all. But like this was his job though. He managed it. Like he enjoyed the doing all the stuff. Like that's not us.
Yep.
We're not here to buy ourselves another job. But like you can scale up a small portfolio and be incredibly successful. But at the same time, it's like, what would you prefer? 20 duplexes or one 40-unit building? It's just, I don't know. It's I guess it all comes down to personal preference.
Absolutely. And that's why real estate's so fun, because there's so many different ways to go forward with it, so many paths, and like there's other people out there that have like 4 or 5 Airbnbs that are doing super well that, cash flow wise, they're going to make way more than, owning a 100-unit building. But, you fast forward another 20, 30 years, it's like, okay, who's doing better then? And again, depending on how busy you want to be with it versus how much you want to just focus on other things. So there's just so many things to consider. So we just wanted to throw out a handful of, some of the things that we think, some of the hypotheticals out there. But yeah, this thing can get, we again could go real deep on this, but we just wanted to give you guys a handful of our thoughts on it, and hope you guys enjoyed that. Manny, anything to close?
Just buy real estate, man. It doesn't
Yeah.
have to be a big apartment. It could be something small. Just buy real estate. It's really one of the best strategies there is to build wealth. Just do it wisely. Have some guidance. Listen to our podcast. Listen to other
Yeah.
podcasts, because I guarantee you, over 20 years, you will. It'll be just so worthwhile. That would be my biggest takeaway. I wish Janelle was here, because I know she kind of likes the smaller stuff, so it would be cool to hear her take on us, because obviously me and you are obviously biased towards the big stuff, but like the small stuff, man, it's good stuff. It's that's what I actually tell a lot of my coworkers, my nurse friends. I'm like, listen, just buy 1 or 2 small multis. You don't got to go crazy, and just pay that thing off. There's your pension.
Yeah.
You're set. You can retire early, and then you can go do whatever you want. So, yeah, that'd be my final takeaway.
No, excellent way to finish. So, I think that will be it for us today. So, everyone, thank you very much for listening. Please like and subscribe. We certainly appreciate any 5-star reviews. Again, just trying to build this community, and again, our target audience is was us probably 4, 5, 6 years ago. It's if we had a resource like this, a lot of headaches could have been saved. So appreciate everyone listening, and we'll be back next week.